Hello everyone and welcome to this video. My name is Waqar, and in this video I'm going to be talking to you about something known as harmonics, and I'm going to be introducing to you what is harmonics. Now, harmonics is a trading strategy and a school of thought in the forex community, which is utilized by many traders. It's a very respected, very credible trading method, and it utilizes market geometry, uses certain ratios and uses certain patterns, uses certain Fibonacci retracements for you to be able to identify what's going on in the market, identify patterns, and therefore you'll be able to predict what's going to happen in the future if you can predict the pattern and correctly identify them. Now, these patterns called harmonics, there are several types of them, which I'll go on to explain in my future video series. But all they are is several patterns which you find in nature. You need to find if they are correct, valid patterns. They are found in all time frames. So if you are a trader that can spend all day in front of the screen, you can be identifying patterns on a small time frame, like a 15-minute time frame, and then quickly identifying these patterns and scalping for 20-30 pips. May not sound like much, but if you're doing that every day for the whole week, at the end of the week you can successfully catch 300-400 pips by doing these small 30, 40, 50 pip trades, which really do add up. If you're not that type of trader and you don't have that kind of time because you're still working at the moment, you can also do these on a higher time frame, like a daily, for example. And the same thing applies. You identify the pattern, and when that pattern is formed, you form your targets and take the trade. And these trade targets can be several hundred pips. You can catch a 200 pip, 300 pip move if you identify a pattern on a higher time frame. Meaning you can not spend all day in front of the computer. You can do your homework on the weekend of identifying the harmonic pattern, and then during the week you set your alerts in the target areas and take the trade and let the markets do the work, and you just collect the profits. So in this scenario right here on USD JPY, it can be considered quite messy actually. There's a lot of information, there's a lot of supports and resistance, like here, support and resistance here, right here. So for a new trader or a not experienced trader, with all these ups and downs, and it's quite messy, and for the average person, they may not be able to identify what's going on. So how would you make money during this? But if you do know what harmonics are and you've studied harmonics, this would be very easy for you to visually identify, just be able to see. Once you've applied the chart time, you've done your work, spent hours and studying the method, you'll be able to see, okay, this is a pattern like this. X, A, B, C, and D. Now, of course, there is more to it. There are different rules for each part, where A has to go, where B has to go, where C has to go, and where D has to go. You have to follow all the rules to see if this is a correct pattern. Once you've done that, and then you know, okay, so in real life, if we were in this situation and we had identified our pattern and we were here at this point in time, all we would do is put alerts on our phone, on our screen, that when price comes to this area, close to our target area, what we would do is set an alert. When the alert happens, then we would use our entry criteria, using candlestick patterns, for example, using EMAs, for example, using price action, using Ichimoku Cloud, for example. Whatever your criteria and strategy is to take in a very good entry to identify when the trend is ending, all you would do is you would sit in the computer for that small amount of time to find your entry, and then you would capitalize on the trade, because you knew where the target area was. So in this example, just to show you how precise this harmonic strategy really is I'm not going into detail because I'll save that for the videos, but for this pattern to be valid, you take a Fibonacci from X all the way to A, like so. And what we see is, this is our relevant fib level for the BATS pattern on this pattern. It's called the 88.6 fib. So all you would do is, in real life, is you identify the pattern. You have to know now where the D leg is going to complete. So all you would do is you would set an alert on your phone. You'd highlight a zone, for example, like this. You'd highlight a zone like this. We can make it even smaller actually, because we know it's only relevant around the 88.6 fib. So what we would do is something like this. Give yourself a nice margin. You set an alert on your phone or on your computer. When price is approaching this level, it means it's time to watch out and see what happens. So we do our purple box. So we know this is our target area. And then we'll come down to a lower time frame. And we would, using our other various strategies, this is our purple box. Now we're looking for entries. Our perfect ideal textbook entry would be on this purple line, the 88.6 fib. But obviously, this is real life. You have volatility, you have banks, you have stop losses, you have market makers, lots of factors coming into it. So it cannot always be to precision. So it's your job to identify an area of relevance, and then you do your job of reading the candles and doing what you need to do to get that perfect entry. So what happened in this situation was you had your purple box highlighted. Now it didn't reach your zone exactly. However, you had these wicks. So you knew price was stalling. You could take an entry on one of these wicks because it's in your zone. And what you would be able to see is you take your short position. Let's say, for example, we got it in our zone off that wick. Now all you would do is you place a stop loss just above the invalidation point, and you would ride the trade down to at least the 50 fib. Now, obviously, there are more rules to it and there are different target areas. But in this trade, for example, you have a great risk to reward. You're getting more than you risk. And you were able to, with minimal drawdown, because it was a very accurate entry in our zone, be able to catch 85 pips, all because you were able to identify this pattern. And as the trade and the market develops, you'd identify new patterns and you'd be able to capitalize pips just like this because they are all over the markets. So in my future video series, I'm going to be going over not only this pattern, which is the bat pattern, but I'll be going into detail various patterns like these. There are more. For example, the butterfly, the bat, which we just explained, the crab, which we will explain. So these have different rules, different shapes, different ratios, which we will explain in the videos for you guys to study and learn from. And then when you spend times in front of the charts, you'll be able to actually see them easily. And then you just do your quick analysis, you highlight your zones, and then let the markets do the work. So I look forward to seeing you there in the members area. I hope that this video was beneficial for you, and see you there. Thank you for listening.